Hello, everyone, and welcome once again to Wisconsin Bankers Association Compliance Corner video. This is for October of this year. The year is going on by fast. But Scott and I also like to bring all of you busy people short videos each month with some new releases from the agencies that are items that you should be aware of. And without further ado, we're going to kick it into our agenda for this month. Couple different things that we wanted to talk about. First being FinCEN has issued an FAQ that talks about SAR requirements, and it's intended to help clarify what financial institutions are supposed to be filing with FinCEN. We also have many actions by OCC meant to reduce regulatory burden for community banks. We have, again, an extension of Section 1071 effective dates, which Scott will walk us through. And then we wanted to make sure that you were aware of a request for comment and information on two items, one from FDIC and OCC, and the other one related to regulatory burdens for complying with 314A requests of FinCEN. And then we have a miscellaneous section where all items are important, but maybe not to the same depth or level of coverage as the first four mentioned items. So we put it all together in a miscellaneous release situation. So with that, I'm going to turn it over to Scott to talk about the FinCEN FAQ regarding SARs.
All right. Yes. Thank you, Heather. And our first item are 4 new FAQs published by FinCEN. Related specifically to suspicious activity reporting. And so these are kind of common scenarios that FinCEN has seen, and some that I think will be helpful for those of you in the BS area engaged with this as well. Now, these aren't new rules, right? They're truly just clarifications, and FinCEN has put these out with the goal of helping to reduce any confusion or uncertainty when banks are not sure if something is SAR fileable, or kind of ongoing monitoring, or just overall operations related to SARs, right? And really help bring in a focus on a risk-based approach. And as we all know, SAR decisions are often judgment calls, right? In the situation that you're looking at and the scenarios that FinCEN has called out in these 4 FAQs. And sometimes misunderstanding the requirements might lead to over-reporting or missed filings, which is extra burden for the bank and maybe information that isn't necessarily what FinCEN is looking for with the requirements for SARs as well. So it's helpful to have these FAQs, which again highlight certain areas for consideration in that regard. So you can see the 4 summarized on this slide, and don't forget that there's a link in the description of the video below to the actual FAQ for you to look through. But we'll just call attention to these points really quickly to help summarize them. So the first one is for structuring. And the clarification here is that a SAR is not required just because a transaction nears the threshold for a CTR filing threshold. The key is actually intent. So when you know, suspect, or have reason to suspect that the activity is designed to evade reporting, such as structuring, right? So this means that you're going to want to look for patterns or behaviors that indicate structuring, not just necessarily focusing on that dollar amount, again, for SAR purposes. The second one is related to continuing activity and reviews of ongoing situations. So after filing a SAR, you're not required necessarily to conduct a separate review just to check if the activity is continuing. Now, the important distinction here comes because we're looking at this from the standpoint of you don't want to do an ongoing review for the wrong reasons, right? We don't want to unnecessarily do a review. That's not to say that a review isn't necessarily required, but instead of just because of a SAR, ongoing monitoring should be part of your normal BSA process. So ensure that any ongoing monitoring is part of broader BSA considerations, not something that's necessarily specially triggered just because a SAR was filed. Part 3 kind of continues with that and gives a timeline as an example. And so FinCEN actually puts this example timeline out for continuing SAR filings. It gives some guidelines and some benchmarks, so to speak, and that being FinCEN recommending typically every 90 days if a suspicious activity persists. Again, related to that suspicious activity itself. Keep in mind that, again, that's guidance, not rule. And so that timeline maybe is something that's adjusted based on your bank's risk profile, your monitoring capabilities, and the situation itself. But the FAQs use that as a reference again, or a potential benchmark. Then the last one, the fourth question, is related to documentation. And so this FAQ clarifies that banks are not required to document the decision to not file a SAR. That said, your internal policy might still require it, right, for consistency or maybe audit or having that ongoing record internally. So make sure you check your procedures before changing anything. But again, these clarifications are meant to help and emphasize a risk-based approach. And a takeaway would be to focus on meaningful suspicious activity, right? Not necessarily mechanical triggers related to SAR, but thinking about BSA more broadly. Again, if you want the full details on that, make sure to check FinCEN's FAQ document in the link below. And with that, I'll hand it back off to Heather.
Thanks, Scott. So we wanted to make sure that you had on your radar the number of actions that have been released by OCC under the umbrella to reduce regulatory burden for community banks. And for the link provided, you will find the announcement of their actions. And at the bottom of the announcement is a link to each one of these items that are listed here. We have several bulletins within. And while not going through every single detail of each bulletin, I did want to kind of put some highlights on why it should be of interest for those of you who are OCC regulated. So the first up is a bulletin where they're announcing a change in their review in an examination. And so what they're looking to do is they're looking to remove any kind of fixed examination requirement and instead look to tailor the examination to the scope and the business model of each institution themselves. And the example that they gave within the bulletin was that OCC currently has a procedure or a policy that requires the examiners to perform a fair lending risk assessment during every exam and to perform transaction testing for flood insurance coverage once every 3 supervisory cycles. And so they've gone and looked at that requirement and have eliminated those rote requirements based just upon timing, and instead are going to allow for examiners to fine-tune what they're looking at each institution based upon that institution's risk. So meaning that if they're going to be reviewing banks' compliance with flood insurance requirements, the examiners now will have the opportunity to determine whether or not there's a need to actually go through the level of conducting transaction testing based upon risk or not. So that should be by itself some helpful burden reduction in the examination setting. The next bulletin deals with retail non-deposit investment products. So that is a tool that's available to banks that you're able to offer mutual funds and various types of investments that are non-deposit products. And previously, the examiners were going through the review of the bank offering these services through a robust checklist found within the comptroller's handbook. And so now instead, they're not going to be looking at the community bank supervision to that level of detail. They instead, again, are going to be focused one by one, each bank. They're going to look at each bank's non-deposit retail investment products as an individual basis versus going through the checklist that is found within the comptroller's handbook. So again, very helpful there. The bulletin regarding model risk management just meant to clarify that each community bank is to fine-tune that model to their own business practices and the products that they are delivering to their customers. So again, meant to be fine-tuned to that individual bank. And then the last two bulletins are to propose rules, because the changes that are within require comments and information to be received before the change being made. But one is to rescind the Fair Housing Loan Data System reporting requirement. OCC found that this is redundant to what is collected underneath the HMDA rules and the ACOA rules. And so because of it being duplicative information, they're rescinding that data system, providing relief. And then also looking to provide relief when licensing. When you have a community bank that is seeking to obtain permission from OCC to conduct certain corporate activities that you need approval for, they're going to make that process a lighter process, and that's going to apply to financial institutions that have 30 billion and less in total assets to now have a lighter processing when it comes to the license requirements. So with that, I'm going to turn it back over to Scott.
All right. And yes, it's not deja vu. As Heather said, again, it's time to talk about 1071. And so CFPB has finalized another rule. And this chart is taken directly from the rule. CFPB kind of knows as well where we're at and has helped by putting it in this format. And so a bit of a culmination of everything ongoing here, litigation and rulemaking and the compliance dates have now been pushed back once more. So this final rule takes effect December 1st of this year, 2025. And since we've all been following this saga together, we know the deadlines have shifted several times. And what's changed here, generally speaking, where we're at, is the compliance dates have been extended by about a year across the board. So we're still waiting on further rulemaking from CFPB on the rule itself. So a bit of a hold on the specifics, but there will be yet more time for anything necessary to get systems ready, train staff, testing of processes. So again, an extension here. The timeline, again, is here on this slide, but tier 1 lenders, so the highest volume is July 1st of 2026, first filing by June 1st of 27. Tier 2 then being January 1st of 27 with first filing by June 1st, 2028. And Tier 3, the smallest volume, being October 1st of 2027 and the first filing also due June 1st of 2028. Note that you can use originations from different 2-year periods, so 2022 through 2025 to figure out your tier, which can be helpful if your volumes have been fluctuating. And then again, CFPB did clarify as well that banks can optionally start collecting demographic data up to 12 months before compliance dates if you so choose. So again, more time, but again, also the rule isn't going away. So for the details on the extension, check out CFPB's final rule in the Federal Register, which we have a link to. And forthcoming, we're anticipating some rulemaking from CFPB on specifics related to the rule. So keep an eye out for that as well. But that's all we have for 1071. I'll hand it back to Heather.
Thanks, Scott. So we wanted to make sure that you were aware of 2 requests of information, so 2 proposals. One is from OCC and FDIC, and we're waiting for it to be published in the Federal Register. But once it is, then we'll have 60 days to prepare comments. And the focus of the proposal is to eliminate reputation risk from all of their supervisory programs. And as Scott and I have talked about in previous videos, the agencies have already taken some steps to remove such information. So this was primarily to codify it so that examiners are forced to, in essence, not look at reputational risk. And for purposes of this particular proposal, reputational risk being that agencies are prohibited from requiring, instructing, or encouraging banks to close out an account, or to prohibit banks refraining from opening up an account or offering a service, or modifying or terminating any kind of product or service based solely upon the person or the entity's political, social, cultural, or religious beliefs, or solely on the basis of a politically disfavored reason. So We've long followed these rules, but this is one of those areas where clarification is being made in the agency's rules themselves, and so we'll be commenting in support of having that removed on behalf of the industry. Another item that we want to make sure is on your radar is a request of information going to FinCEN as it relates to compliance burdens for complying with 314A requirements. 314A requirements, as you might recall, is the requirement where we get a list of names, and as a financial institution, we have to go through and search your records. You search your accounts for the last 12 months to see whether or not you have a match. You search your transactions that aren't linked to an account for the last 6 months and determine whether or not you have a match, and you report back whether you have a match, or if you have a match, I should say. And so that does come with a burden. And so FinCEN is wanting to hear what types of costs do you as a financial institution bear when going through those searches and reporting back, because you only have a 14-day, a 2-week time period to do that performing search and reply. So it can be pretty quick when you receive those. So the comments are due in early December. And if you have comments on either one of those, feel free to share those with Scott as he works through in completing responses on behalf of our membership back to those agencies. Scott?
All right, and just on our last slide, a few miscellaneous items to go through. Quick but important updates. So maybe not necessarily something major, but still things to make you aware of. The first one is SBA template letter for the debanking orders. And I don't think we've talked about this topic yet, but it's something that likely you're aware of regarding the debanking order and the requirements related to that. But SBA has released a helpful template letter that banks can use to respond to any such debanking order demands. And this is specifically for institutions with 30 billion or less. But if you need a copy or have any other questions on this topic or the letter itself, reach out to us here at Legal, and we'd be happy to talk you through or get you a copy of it. It's a good resource. Again, if you're navigating, you're an SBA lender and you have some lending there, and maybe you're getting questions or have concerns regarding account closures of that nature. The second one being the penny phase out. And so the Federal Reserve had issued FAQs on penny deposits and orders regarding the phase out. So if you have any questions from customers, businesses, internally, or maybe potential fraud concern as among others as well, these FAQs do clarify how you can handle these issues and topics operationally. Also, don't forget that WBA has a frontline fact sheet that you can share with staff and use to help explain what's going on as well. But we'll talk about the frontline fact a little bit more and where you can find that on our final slide when we wrap up. But that is a new resource that's designed to help kind of everyone just understand what's going on with this and be better able to communicate that to your customers so they can understand one, what's going on, what bank's role is on that, and really just facilitate those conversations between frontline staff and your customers. The next item is an updated OCC Fair Lending poster. And so this change is specifically to the Spanish version, which adds a new statement. So long story short, if you have those posters in your branches, just make sure you're using the latest version. Then we have an FRB scams and check fraud toolkit. So the Fed expanded its toolkits to include scam mitigation and check fraud. So these are new modules and resources within those existing tools that can help you to strengthen your fraud prevention programs, or again, communicate with customers, help provide financial literacy opportunities. They're practical and worth reviewing, whether you're just looking for an update, refresher, or maybe even looking for new training or new internal fraud controls. And then for mutual banks, the Fed has released FAQs and template letters to assist with raising capital. And so these resources outline options and provide some sample language, which could be helpful for planning and maybe communication with regulators. We do have 3 asterisks on this one because there's 3 separate links. So take a look if that's something that is going to be helpful for you. So again, it's just some smaller updates there really quick, but important hot topics in the world of compliance and just overall operation as well. So if any of those apply, either reach out to us or take a look at the link in the description below for more info. With that, we are going to wrap up for the month, but again, wanted to remind you of some various resources. Again, the WBA website has a whole host of tools available for you. Compliance tools and resources, various publications like Compliance Journal, opportunities for training. Should there be a specific topic you're looking for, we're happy to assist with that. Of course, we have the compliance hotline, right? So give a call, reach out, shoot us an email if you have a question on any of these topics, if you're looking for any resources or to have a conversation that we might have mentioned. But also wanted to specifically call attention to the best practices library. As I had mentioned, we have a whole new type of resource available for you in there in the Frontline Fact. And again, I think many of you will find this helpful as it's designed to really be specific to helping you to get information out to your frontline staff, right? The penny phase out being the example that we talked about from this month, but really it's a snapshot of that, right? What do frontline staff need to know? What's going on? How does this affect them? How does this affect the bank? And how can they take that information and have questions or have conversations with customers? Should customers have questions? Should it come up? Should your bank be doing something specific in regard to the penny phase out operationally? And so in that way, it can be tailored to your specific bank needs, but we wanted to start these resources for that purpose. So take a look, as there's a few already there for you within the best practices library. If you need help accessing the best practices library, reach out to WBA Legal as well, and we can get you set up with access to all of the materials that are on there. But with that, we are going to wrap up. Hope everyone's fall is off to a great start, and we will see you next time.